If you've been trying to withdraw your Pi from exchanges like OKX, Bitget, or Gate.io, you might have noticed something strange. Your funds are stuck. Even after the listing, some users can't withdraw their Pi back to their wallets, while others who bought Pi on these platforms are completely blocked from sending or trading it freely. So what's really going on? Is this an exchange issue, or something bigger? Could this be market manipulation at play? And most importantly, how can you protect your assets in this uncertain situation? In today's video, we break down everything you need to know about this developing situation, the possible reasons behind it, and what steps you can take right now to safeguard your Pi holdings. Stay tuned, and let's dive in. Hey everyone, welcome back to the channel. If you're new here, we cover everything related to crypto, blockchain trends, and market updates to keep you ahead of the game. Today's topic is critical. Pi network users are facing serious issues with withdrawals on major exchanges. Some deposits are stuck, withdrawals are limited, and there's growing concern over whether these exchanges are holding your funds hostage for their own benefit. If you hold Pi or plan to invest in it, you cannot afford to miss this video. Let's break down what's happening with the Pi network and the serious issue users are facing. On February 21, 2025, a concerning wave of reports emerged from major exchanges like OKX, Bitget, Gate.io, and Pionex. Users cannot withdraw Pi to their mainnet wallets. Typically, when a new token is listed, users can begin withdrawals within 12 to 24 hours. But in this case, Pi network users are still waiting more than 48 hours without any resolution, and many have no means to transfer their coins out of the exchange. Even more troubling is the fact that users who initially deposited Pi from their personal wallets are able to withdraw their funds in some cases, but users who purchased Pi directly on the exchange are finding their funds completely locked. They are unable to send, trade, or transfer their Pi. This situation is highly unusual and raises major red flags. With withdrawals being selectively blocked for some users and not others, it's becoming clear that this issue goes beyond the typical delays seen in new token listings. What could be causing this? What does this mean for the safety of your assets? Let's dive deeper into the possible causes. Liquidity retention and market control. Exchanges generate significant revenue through trading fees, and one of the ways they maximize this income is by holding large amounts of Pi in reserve. By doing this, they gain control over several key market factors. First, they can inflate their trading volume, creating the illusion of higher demand. This can manipulate the perception of Pi's value and activity in the market. Additionally, by holding large amounts of Pi, exchanges can restrict the supply available for trading, further controlling price movements. This means they can push prices in a direction that benefits their trading activities, especially by limiting the number of coins available for users to buy or sell. For context, data shows that these exchanges collectively hold over 231 million Pi, OKX, 147 million Pi, Bitget, 50 million Pi, Gate.io, 30 million Pi, Pionex, 4 million Pi. That's a massive chunk of Pi's supply locked up on just a few platforms. This not only gives these exchanges significant influence over Pi's price but also leaves users with less control over their own assets. When the supply is restricted, users may find it more difficult to move their coins or respond to market fluctuations as they normally would. This situation raises concerns about whether exchanges are using this strategy to manipulate the market and profit from the limited liquidity. Market manipulation and price pumping. When users find themselves unable to withdraw their Pi, they are essentially locked into the exchange. This creates a unique situation where traders are forced to take certain actions they might not have otherwise chosen. With their funds trapped on the platform, users are compelled to keep trading on the exchange, even if they don't want to, simply because they can't access their assets elsewhere. Stake their coins for rewards, which can seem like an appealing option, but it further entrenches users within the exchange's ecosystem, often with delayed or limited access to their funds. Buy more Pi, especially when the supply is artificially reduced due to the exchange holding large reserves. This scarcity can drive the price up, incentivizing users to purchase more, either out of fear of missing out or to take advantage of potential rewards from staking or trading. By restricting withdrawals and artificially limiting the circulating supply, exchanges can control the price of Pi without the normal market dynamics playing out. This is often seen as a method of price pumping, where the price rises due to restricted availability rather than actual organic demand. But is this market manipulation? Some experts believe it certainly could be. By limiting users' ability to freely trade and move their assets, exchanges may be artificially inflating the price, creating a situation that benefits them, but leaves regular users at a disadvantage. This kind of practice can undermine the integrity of the market, as it skews the natural supply-demand balance in favor of the exchange's bottom line. It raises the question of whether exchanges are using these tactics to boost their own profits or manipulate the market for their benefit. Liquidity trap, forcing users to stay. Some exchanges are encouraging users to deposit more Pi, promising staking rewards and trading bonuses. But what happens when users try to withdraw? Nothing. They're stuck. This is known as a liquidity trap, where traders are forced to keep their assets on the platform, even when they don't want to. Remember, the longer your funds stay on an exchange, the more control they have over your money. The dangers. Could this be another FTX? History has shown us time and time again that withdrawal delays are not something to be taken lightly. The collapse of major exchanges in the past is a stark reminder of how quickly things can go wrong when users can't access their funds. Remember FTX? What started as a few small withdrawal issues quickly snowballed into a catastrophic collapse, with billions of dollars in assets wiped out almost overnight. It all began with seemingly minor problems, delays in processing withdrawals, that were brushed off by many until it was too late. One of the most infamous failures in cryptocurrency history, Mt. Gox went from handling over 70% of all Bitcoin transactions to becoming a cautionary tale. Billions in Bitcoin were lost due to severe mismanagement and security breaches, with users unable to access their funds as the exchange spiraled into bankruptcy. Now, we're seeing similar warning signs with Pi withdrawals being blocked on major exchanges like OKX, Bitget, and others. While we are not suggesting that these exchanges will necessarily follow in the footsteps of FTX or Mt. Gox, these delays should not be ignored. If an exchange is suddenly unable to process withdrawals, it could be indicative of deeper issues, such as liquidity problems or internal financial instability. Do not wait until it's too late to take action. It's crucial to be proactive. If you're experiencing delays or restrictions on your withdrawals, it might be time to seriously consider moving your assets off these platforms to a more secure wallet, where you have full control over your funds. The longer you wait, the greater the risk of losing access to your assets. Protect your investments by staying alert and taking steps now to safeguard them. Here are 4 urgent steps you need to take to protect your Pi and crypto assets. Monitor exchange announcements. Check official updates from OKX, Bitget, and Gate.io. If withdrawals don't open within 72 hours, be extra cautious. Do not deposit more Pi. Until the withdrawal issues are resolved, avoid sending more Pi to these exchanges. Keeping your Pi in your own wallet is safer. Track blockchain data. If you can, check the Pi network blockchain to see if withdrawals are actually happening or if exchanges are inflating their numbers. Stay informed and diversify. Follow reliable crypto news sources and be ready to move your funds if things get worse. At its core, cryptocurrency is about financial freedom and control over your own assets. When exchanges block withdrawals or manipulate liquidity, they go against these principles. This is your money. You should have full control over it. If you found this video helpful, please like, share, and subscribe for more honest crypto updates. Drop a comment below. Have you experienced Pi withdrawal issues on exchanges? Let's discuss. Thanks for watching, and as always, stay safe in the crypto space.